So hello guys, this is Anshuman Rao and welcome back to another video. So this video is gonna be about a trade breakdown that I have took during London session. In London session, and also a trade breakdown which I have took during pre-London session. And the trade which I took during pre-London session was the GBPJPY trade. I took a trade in GBPJPY during pre-London session, and during London session I took a trade in gold. So today's day was pretty much in profit, in plus. Let me show you. So this is the funded account in which I am trading now, the $50,000 funded account. So let's see the daily progress. On the first day we made about 2% gain. On the second day we made about more than a 1% gain, and on the third day there was a no trading day, no setups were formed, so I didn't execute an order and didn't trade anything. On the third day we faced a initial loss, which was a good loss, but in the second trade we we traded against our we traded a thing which was not in our setup. In fact, we traded against our setup. It was in our setup, but we didn't go with our setup. So yeah, this was unnecessary loss, as you can see. This is the trade history. Let me show you in complete. Yeah, so this is the trade history of the fourth trading day on 12th December, as you can see here. So this, as you can see on the gold, we, as you can see, we lost about $200 if we add up this. And this was a good loss actually, because everything was in a setup and everything was in controlled way, and lot size was also in very good. But in GBPJPY, actually what happened was I basically trade breakouts, and the breakouts I trade are during the pre-London and London Open, and also sometimes I trade breakouts during pre-New York and New York Open. But mostly I trade breakouts during London Open and pre-London, because the on those times a huge volume kicks in, so there are more probabilities for the price to push in the uh, particular direction in which it breaks out. So this was out of my setup, because I didn't trade the breakout. Actually, I instead, like, the price reached to a support level, and it though broke out, but I just, for the sake of covering up these losses, I just took another trade immediately, which was resulting in a revenge trade, and I lost this amount. Actually, in this trade my setup was completely formed, and in the end I noticed that my setup actually worked in this trade, but still then I lost because I traded against my setup. So this is what makes the day a loser, and this was unnecessary loss. Even though, if I would have stopped, if I wouldn't have placed this revenge trade, I would have lost only $200, which was perfectly acceptable. But we lost about $732, which was unnecessary. So yeah, everything happens for a reason. The most important thing is we got a learning from it, and it is a very 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 important learning and very very valuable learning. Basically, we collect wisdom. So this is the data of today. This is the data of today, as you can see. So yeah, in GBPJPY, as I said you earlier, in the pre-London session, I placed a trade in GBPJPY, and during London session, I placed a trade in gold. So this was a losing trade in GBPJPY, as you can see here. We lost about 1%, 570 $70 something else, if we add up this whole losses in GBPJPY. But if we see in gold, we made about 950 something dollars. 900 and 900 and I am let's calculate. No, it doesn't need to. We don't need to calculate. My maths is little bit weak. Like I'm little slow at addition, but we have to fix that. We don't have to just we can't tie our hands and sit. We have to improve this. So yeah, yeah, close to 950 something profit, but we made $500 loss. So overall, it's a positive day. We made about $410 of plus. So overall, we closed this week. We closed this week with $1,182 of in profit. So it kind of turns to, if we calculate, something around 2.2%. So yeah, in week, if you are generating 2.2% in week, with just, as you can see here, this is all the data over here. I just had a 33% win rate. Even though I had a 33% win rate, I am still profitable in this account. How is it possible? My average risk to reward ratio is 2.27. Even though my average R, the average R multiple is only 2.27 and my win rate is only 33.33, how am I profitable in this account? Like $1,100, I'm still up 2% for the whole week. It's just the magic of risk management. That's it. So without wasting any time, let's break down the trade. First, we will break down the losing one, which was, which was a good loss actually, and I didn't regret it because it was in my setup. And the lot size one, I didn't oversize in this position, and also I lost the amount I was willing to lose. So this was the trade over here. So let me start with the daily time frame. So in the daily time frame, as you can see, this bullish candle over here of this today was not formed. So I basically developed a confirmation bias in GBPJPY by seeing this candle over here, you know, because this was a bearish candle. So as this was a bearish candle, so I anticipated the price to move down up till this support over here. But who knows that it is going to be a retracement. Even till now, it is not concluded that this bearish candle is a retracement candle. So yeah, we are just pushing up randomly and yeah, going up. The overall trend is bullish, as you can see, but I was just anticipating for the price to move down, because this kind of becomes a resistance, which is you can conclude it's a supply zone over here. It's a supply zone. But yeah, uh, sometimes your set of probabilities, also your set of anticipations, doesn't work out. So yeah, sometimes you get wrong. But in 4 hour time frame, I just develop I just developed a confirmation bias in the daily time frame, because the candle was bearish, the previous day candle was bearish. So I developed a confirmation bias that you know I will only look for sells in GBPJPY. So I also developed, I had a great conviction that price is gonna move down and down. So I was only looking for shorts opportunities. So yeah, in 4 hour time frame, there is not much of a market structure. So only VIX. So we don't get enough market structure to draw supply and demand zones and follow to see the price action clearly. So we jump into 1 hour time frame, as you can see here. Yeah. So in the 1 hour time frame, as you can see, we had a supply zone over here. No, not supply zone, the demand zone over here, which we can call a support. I'm just confusing between supply and demand zone. Yeah. So let's assume support and resistance in a simple language. Actually, if we tell supply and demand zone, that's much of a more of a, professional. But let's assume it as a support, because we just as you can see clearly that it's a support over here. And my setup was simple. that if a candle gives a closing below this support over here, this side wicks, the wicks in the clean range over here will become wick fills, and we will continue to push down up till here of 23 pips. And even though, even after the price breaks the break this wick fill, we are good to go, and there are higher probabilities for the price to move even further down up till here 38 pips, which adds up to, you know, 66 pips. So we were right, actually, you know, we were right, because the market did broke this support over here, and you know, covered this week as well, as you can see clearly. It covered this week as well and gave a closing and you can see the perfect closing over here with this, you know, this low. In this low, the market just gave this closing, beautiful closing. But I should have booked partial quantities to, you know, and moved my stop loss to break even, but I didn't do that. And this is one of the mistakes I, you know, stated in this video, that earlier I didn't realize while, you know, exiting this trade with a loss. Because when I got stopped out, I just thought, yeah, this is the amount I was willing to lose, but I would have lost much way more less than what I was willing to lose. Because if I would have booked partials here, and if I would have moved my stops to break even, then I wouldn't have lost anything. Even though, like, even in reverse, I would have made something, you know, I would have made something. So okay, no problem. This was, you know, a type of a business expense, and we can accept it because this was a good loss. So this was GBPJPY, and the main part, the gold, which was you know, which we were all waiting for, the gold. So I took entry around here. Let's see in the 30-minute, and my stop loss was around here. I just captured a chunk of a movement, not much. I just, you know, it was a 1.5 hour trade. So yeah, not 1.5 hour, let me show you. Okay, I just entered around here, and we got a move up till, actually I exited here, guys. So I am just, you know, I just exited, you know, you can see this retracement. Before this retracement, I just exited in this point actually. So yeah, just cope up with this. Okay, yeah, you know, I was just putting my stops up till here. You know, the stop was not here also, it was here. So it kind of makes around 3 hour trade, which was a good trade, you know, because we just continued to push down and down and down. We just continued to push down. So yeah, this was the trade, and let me break down this trade, that why, the reason behind this trade. So in the daily time frame, you know, we had a built up strong conviction and a strong confirmation bias that gold is going to go bearish. As you can see, the major reason behind this is we have major supply zone, the major resistance over here on the daily time frame, which market respected so beautifully. And from this, the price started reversing, and till 2 days we are, you know, in a bearish format in this gold. So confirmation bias was developed that we are only going to look for shorts in gold. So in the 4 hour time frame, as we can see, so beautiful market structures we are getting over here. Like, even though After placing this trade, till now, if we would have held to this trade, we would have captured till now around 274 pips, guys. Like, we just have to hold this trade, if I would have captured, like if I would have held into my trade, this trade over here. So yeah, you know, everything happens for a reason. You just have to hold the profits. But the reason behind exiting also I will explain to you. I just had an early exit, panic exit, you can see, you can say. So in the 1 hour time frame, as you can see here, this zone over here is a very critical zone. Why? There is a reason, because as you can see this rejection over here, as you can see there is a, you know, I don't know what is this, but here, from here, this also has an influence, and I just considered it as a, a retracement. But you can consider it as a, what you will say, a resistance, because after a bullish candle, a bearish candle was formed, and again a bullish candle broke out this zone over here, and we continue to push up when we broke out this zone. And from this, as you can see, we got a rejection over this price, over this zone, and we just continue to push up. And also here we got a rejection point, so it kind of makes a very very critical zone over here, which when gets broken out, we are most likely to continue in that direction. So I had a strong conviction that gold is gonna go bearish. So after we got to see price breaking this zone over here, which is also a support zone, I had a strong conviction, and I just placed my entry over here and just held on to the thing. So we, held this trade around 1, 2, 3, 4, almost 5 hours. We held into this trade. You know, I was just I was just impatient to exit, because I was just looking at the charts, which is a major mistake. This mistake is to be rectified. If, like, early exits and panic as exits are also one of the not devastating things, I would say, but it's just saying no to the money which is gonna come to you. Yeah, it's just early exits and early exits and panic exits uh, are just like saying no to money that is gonna come to you. So yeah, in the 1 hour time frame, after this zone gets broken out, I just place my entry, and in the 15 minute, I placed my stop over here, like above this candle over here. And on the 30 minute, no, on the not on the 30 minute, on the 1 hour time frame, based on the 1 hour time frame, I placed my I placed my take profit over here, TP over here, because we have a support over here. Due to this support, so I was aiming for the price to come to this zone, and my exit plan was also ready. So I executed on the 30-minute time frame, and on the based on the 15-minute time frame, we placed our S stop loss, and on the 1 hour time frame, we placed our take profit. So this is what, very simple trade breakdown over here. But we just exited around here. We just exited around here. So it kind of makes a 1.5 hour trade. Yeah, it makes a 1.5 hour trade, but if we would have hold on to this position, so it would have a 4 hour move, four, which is absolutely phenomenal. But yeah, my entry plan was ready, my exit plan was ready, even though this retracement, as you can see, was very very big. This retracement over here was very very big over here, as you can see. So this kind of makes, psychological imbalances, but yeah, we have to cope up with this as a trader, because this is what, you know we have to deal with these things. You have to learn to deal with these things, otherwise you are not going to be a profitable trader. Because imagine you are losing $10, and in the next trade you are running in a profitable position, and you made $5, and the trade is still running. You just partially booked $5, and the trade is still running, and you exited in $6. So in total you made about $11, which is, okay, you are $1 in profit. Earlier you lost about $10, and now you made $11 in one trade, which, $1 you can still consider it as break even. But imagine the trade which you exited recently is going in the same direction, and you are just regretting that why you didn't held on to this trade. So yeah, this happened to me a very 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 so many times. It happened to me till now so many times that I didn't held on to my trades. But yeah, we just have to try to hold on to the trades, because we never know from where the market will reverse, because we have so many zones over here. As you can see, my exit plan, even though I didn't also follow my exit plan, I just got panicked. And because the reason behind the exit was, the retracement was so big, because I was waiting for the price to move down and down, 1 2 3 on the 1 hour time frame. If I show you, I was waiting around 5 hours for the price to reach this zone over here. But this was a very big retracement, so I didn't able to see it, so I exited. So this is what, problem of traders, that they are impatient. And they are not able to see what the market is showing them. So they just scare around and just exit, or don't hold on to their trades. And this is one of the example of it. But we are still in a good way, but we are closing this week with 2% positive. So I don't have any regrets, and I got many many learnings from this week. And yeah, this was all for the video, guys. Thank you. Thanks for tuning in, and hope you got some learnings, and enough wisdom to enough wisdom to which will help you in your upcoming trading journey. So thank you. Bye bye. Peace out.